Hi, everyone, and welcome to The Hash, your daily beat on crypto and culture. My name is Naomi Brockwell, and today on the show, we have Jen Sanasie, George Kaludis, and Nate DiCamillo. Welcome to the show, guys. We are going to kick it off straight away. We're going to be talking about inflation and the Fed and all those fun things. So I'm going to throw straight to you, Nate. What have we got there?
Thank you, Naomi. So what we have going on is we could see the Federal Reserve taper its monthly 120 billion in bond purchases as soon as October, according to their central bank governor, Christopher Waller. So for some libertarian Bitcoiners who are skeptical of the Federal Reserve and want to create like an alternative financial system, this news couldn't come soon enough. You remember that these purchases are known as like quantitative easing, right? And they're designed to discourage a flight to safety by partially creating lower yields on risk-free assets. The whole point of this program was to push towards full employment reserve, and they Waller said that if we see jobs numbers of 800,000 for the next 2 months, that's likely that we could see tapering by October. So we've had jobs numbers that have been all over the board recently. Some as low in April did as low as 260,000. Last month it was about 850,000. I was curious to know from you guys' perspective, what do you think if we're going to hit those numbers, 800,000 for the next 2 months? And is this tapering is coming too early or too late?
Too early. Ha, ha. All right.
I was waiting for that.
On this. I mean, like the Fed has two mandates. Like the Fed shouldn't exist, but the Fed has two mandates, right? Keep unemployment low and keep inflation at like 2%. So they're well above the 2%. And they've said, oh, we're actually going to do this strange adjustable rate interest that's averaged. It's averaged over some unspecified period. We're not going to tell you how long it's averaged over, but just know you're going to see higher inflation, and that's fine. We're not hitting our mandate, but we're cool with it. It's all good. And they keep telling us this is all transitory and this is all fine. Like what's interesting about this article is it talks about like how, one day we're going to clamp down. It's going to come. And then at the very end, there's just this little paragraph. It says, my concern is just anecdotal evidence I'm hearing from business contacts who are saying they're able to pass prices through. They fully intend to. They've got pricing power for the first time in a decade. Those are the sorts of issues that make you concerned that this may not be transitory. I completely agree with that. We are seeing that. And so I just don't see this as this transitory phenomenon. I think that if they do start to taper everything back, like the amount of money printing that we have seen has been completely unprecedented. So tapering now, I just don't see that as having like a huge help. I do think that inflation is an issue and is going to be a permanent one. I don't know whether it's going to be hyperinflation. I don't think so, but who knows? These things can get out of control really, really easily, and it can be very difficult for central banks to keep pretending that they, are keeping things under control. So I'm not sure what's going to happen, but it doesn't look like the economy is looking too good right now. But Nate, maybe you have a different take there.
I mean, Naomi, to a certain extent, like whether or not the transitory, what they're thinking is going to be transitory, whether or not those supply side inflation issues just move from housing to some other asset, like whether or not we continue to see more issues in the supply chain because of Delta variant or other issues in the pandemic, could see a extended time of having inflation in the 4 to 5% range. And so I think that this is definitely the fact that this discussion is happening within the central bank definitely points to central bank governors realizing that they need to be considering like when they're going to hike rates in 2022. And so before you hike rates, generally tapering, pulling back on bond purchases comes before that. But George, I'm curious as to what your thoughts are.
Yeah, just a really short point here is that are we going to see something that is sort of as disastrous in the other way, like we saw really at the beginning of 2020 when we had the original, big money printing, right? we saw a lot of what hardcore Bitcoiners and really people who pay attention, like Austrian economists, saying, big asset inflation. What asset inflation is going to do is going to increase the level of inequality between people who maybe save more of their money in just cash versus people who are more wealthy and have a lot more assets. Are we going to see something where a tapering is going to lead to just a precipitous drop in the stock market, and this has stock market drop going to bleed into other assets? Are we going to see people jump back into cryptocurrency as a way to, okay, now I'm going to go get rich now while the stock market is going down, right? And before, when we say, all these stocks were going up, it was typically wealthy people were holding it. But now with, the Robin Hoods in the world and people, being inside all the time, everyone became a day trader. So are there going to be people that get brought down who are more regular and, they're hurt from the tapering potentially? Just an idea.
I want to jump in there and just say, when you talk about this very charged word of inequality, really the biggest issue with printing money is that there's huge inequality in terms of who benefits from this money printout. The people who get that money injected straight into their industries or into their bank accounts or into their political coffers, they benefit tremendously because the economy doesn't yet adjust and see, a decrease in the value of that money. So they basically just get this free handout. As that money trickles through the economy, it's the people at the very end who don't get to see this money, who are just losing their purchasing power and don't really see any benefits. So there's huge inequality between those who are politically connected and who basically have a direct line of credit to the Fed and those who don't. So that's why this just is such an incredibly bad system that generally just leads to, corporate bailouts and, politicians promising money to all of their cronies. But, we'll see what happens there. Maybe we'd see a tapering and maybe things are all fine. But in the meantime, at least we have Bitcoin as an option, right? But Jen, what have we got going on with Binance at the moment? More controversy.
More controversy. But before I move on to that, I just wanted to add quickly to George's point there. We talk about everyone becoming day traders over the pandemic, and then we hear Robinhood wanting to provide more education for their users. It would be interesting to see platforms like that start educating their users on monetary policy and how it affects the trades that they're doing and how it could potentially affect their financial future. But that's a thought for another day. All right. So we're moving into the regulatory world. HSBC has blocked credit card payments to Binance in the UK after the Financial Conduct Authority announced in June that the exchange cannot conduct regulated activities in the country. So Binance just cannot catch a break. Naomi, I'm going to kick this off to you for your initial thoughts here. I mean, what is Binance going to do next? They're looking for that CEO. They haven't announced that they've found one yet. What are your thoughts on Binance's future?
I mean, it's just interesting that now you have HSBC shutting things down because previously we saw Barclays do the same and Binance responded to that and said, actually, Barclays doesn't really understand what's going on. We weren't shut down. Binance itself isn't doing any unregulated activities. It's actually Binance Market. It's a separate entity. They're conflating the two. So there was a little bit of a controversy there about, whether Binance in general is just going to be shut down and whether it's actually the unregulated activities. And what this has kind of shown is that, when the government kind of pushes back against what a business is doing, they have all kinds of levers that they can pull to, it doesn't matter whether these companies are doing anything illegal or not. And so now they're kind of losing all of their banking relationships, which is not good news for them. And it's no wonder that they are looking for someone to take over as CEO in the UK who has a regulatory background. Definitely seems like a smart move if this is going to be the future of centralized exchanges. Obviously, I think that exchanges, the future is going to be in the decentralized realm. I think we're going to see a lot more innovation there, especially if regulators keep trying to shoehorn these innovative new assets into existing paradigms. But Nate, I'll throw to you. What are your thoughts on all this?
Well, I agree, Naomi. I think that the banking system is another lever that regulators can use to kind of clamp down on crypto companies, as we've often said on this show. It is interesting to me that the FCA has said that this is primarily due to the fact that Binance doesn't have the licenses that it wants to have, or that the FCA would require Binance to have. I'm also curious to know for banks that are just shutting down operations completely for Binance, is this something that's related to just the licenses that they don't have? Is it also related to like what their controls are, whatnot? We've seen in the past banks about like being uncomfortable with crypto exchanges not having enough controls. But I'm curious to see kind of as this goes forward a little bit more. I'd like a little bit more clarity from like banks like Barclays, HSBC, and whatnot as to what they see kind of in Binance's business that they find problematic. Is it just licensing, or is it something more?
Mm-hmm. George, what's your take? Sorry, Jen.
Okay, I was just going to read this quote quickly from a Binance spokesperson in that CoinDesk article that showed up on the screen just a bit earlier. We take our compliance obligations very seriously, and we are committed to working collaboratively with regulators to shape policies that protect consumers, encourage innovation, and move our industry forward. And I think this is just so indicative of how Binance has really tried to work with regulators over the last few months, and it just really still seems like they really can't catch a break. I think earlier this morning, CoinDesk published a story about FTX in the US hiring on a new attorney who's previously worked with regulators. And I wonder if that's the future of these centralized exchanges. Are we going to start to see more and more of ex-regulators and ex-attorneys who have worked with regulators working with the exchanges to make them into more traditional financial structures? I don't know if you have any thoughts on that, George.
Yeah, so 2 quick points here. I think first, this points to the very obvious ideal that just because money's in a bank account, it doesn't necessarily mean it's yours, right? Like, who are you to tell me that this is my, I can't do this with my own money, right? So I think that actually might push some retail people into cryptocurrency. Like, okay, I'll put a little bit of my savings in, Bitcoin or some other cryptocurrency because I can fully control that. But to your point about the centralized exchange, and I think Naomi touched on DEX is kind of growing in the future, is that Binance and CZ, the founder of Binance, hasn't exactly operated sort of with the regulator in mind when he was growing the business. And now it's sort of, having to pull it back and try to get on the good side of regulators. But, regulators have memories and they remember like, okay, CZ is kind of like floating around. Does anyone really know where he lives? Does Binance really have a headquarters? So maybe, there's a little bit of tail there of them being just a little bit vindictive on if, it's Binance. So like, okay, are they really going to be good guys? Maybe we should look to someone else like FTX to be the good guys.
Yeah. But for sure. We'll move on from there for now. Go to an interesting story that just came up yesterday. So FluffyPony, otherwise known as Riccardo Spagni, is a former maintainer of the privacy coin Monero, and he was arrested yesterday. Apparently, he is being extradited to South Africa. He's going to be facing fraud charges for crimes that are unrelated to crypto. The accusation is that he stole $100,000 from his former employer, Cape Cookies, by creating false invoices, routing payments to his personal account. I have a lot of thoughts on this whole thing. But the first thing I will say is that we don't know what the facts are in this case. I have seen lots of indictments in the past against people that have actually been completely incorrect and used to smear people. So I'm not going to cast any judgment about that side of things. But I will say that the fact that Riccardo and, he's this figurehead in Monero and people would potentially see him as this target for regulators. I'm not sure whether that's the case here, but maybe it is. And if it is, I think that if regulators start going after figureheads in the crypto world, they're going to very fast realize that cryptocurrencies are decentralized and don't really need these figureheads and will continue with or without them. So if this is a means of controlling the narrative or controlling the currency, I think that it's going to fail. But that was just like a first thought I wanted to mention just right off the back here. George, I'll throw to you. What are your thoughts on all of this?
Yeah, I totally agree with you, right? My favorite cryptocurrency is Bitcoin. And if, you're angry at Bitcoin as a regulator, who are you going to go after, right? There's maybe 4 or 5 people that might be Satoshi, but even if you found out who Satoshi was, there's so many nodes out there that are maintaining the network. Like, who really even knows who you could possibly go after? My biggest concern, I think, with the chatter I was seeing on social media and really out of media outlets is the conflation of the fact that, FluffyPony was doing something illegal that was totally or potentially doing something illegal that was totally separate from the cryptocurrency world, but because, he might have a checkered past, that automatically makes all of cryptocurrency shady and dirty, right? It's kind of interesting where we're talking about it's rules without rulers, but all of a sudden you can attach someone to maybe the Monero ecosystem, like, oh, all of Monero is dirty, or, say someone like an Adam Back went to prison for something, you say, oh, all of Bitcoin is bad because, he's Blockstream and he loves Bitcoin. So it's a little frustrating seeing the conflation of past actions unrelated to cryptocurrency, seeping into the world of cryptocurrency.
Nate, what are your thoughts here?
Yeah, I was curious to know, actually, I wanted to ask you, Naomi, if having something like with FluffyPony, like be a case like this, is this does this do anything to Monero? He was a former maintainer. Was he fairly involved? Now, like, what is the status of that?
So it doesn't affect Monero at all. And the kind of details of how this laid out, it kind of raises some red flags for me. Again, I'm not casting judgment on the facts of the case. Obviously, we don't have any. But I will say that in his response letter that he put out, he said, listen, we're not quite sure why I'm being arrested. I was meant to appear in court, and it was a court date about appearing, setting like a future court date. And I had a representative there, and now you're telling me that I fled the country. Like, he's actually on the way to a conference, and it was kind of a big surprise, that he was kind of bombarded and while the plane was refueling. And so it's kind of interesting that they kind of this very heavy-handed and very public way got him for something that happened 10 years ago, and for when he had a representative apparently at the court proceedings that they're now saying he didn't appear for. So a lot of strange things going on, but again, we have limited information about this. But Jen, what are your thoughts?
Yeah, I just want to echo what everyone has said on the panel, really. It's just that if regulators start going after these figureheads, it just confirms that they don't really understand how the ecosystem works. And it's unfortunate because the mainstream audience, the people who we want to get involved in crypto, are going to read stories like this, connect figures like FluffyPony back to Monero, even though the story has absolutely nothing to do with Monero or how it's run, and think that it's bad or shady or dodgy. And crypto will continue to live in the shadows when it has so much good to offer for people. So it's unfortunate. I hope that this isn't a trend that we start to see in the industry. And I am very curious as to what's going to happen next. Like you said, Naomi, this case is from over 10 years ago. So it's just all very strange.
Yeah, it's a little bit strange. And, if he did do something wrong, I hope that, he makes amends and continues to be a positive contributor in the ecosystem. If he didn't, I hope that he's able to fight back. I'm personally sad because I was meant to actually meet him just before he was arrested. He was on the way to hang out with a bunch of people. So I was sad that didn't happen. And I wish his case the best of luck here. The regulators can't bring down crypto. That's the kind of big takeaway here. But George, I'm going to throw to you for the next story. What's going on with Square?
Sure. So tangentially talking about figureheads, we have Jack Dorsey and his company Square. So Square, the point of sale payment processor and the payment parent company of the Cash App, had really a big week this week and really a big 12 months. If you look at their stock price, about a year ago it was $130, and now they're trading above $260. So yesterday, they announced a $29 billion acquisition of an installment payment company called Afterpay, which in short, at point of sale, when you buy something, you can have an option of doing 4 installments for the payment. So if you buy something for $100 over, a period over, a quarter, you can pay $25 each time and you pay it off. And really the idea is that there are no predatory rates here that you see with the, credit card companies and potentially with payday loan providers, which I think is really cool. I think that aligns with the ethos of what Jack Dorsey and Bitcoin are trying to do. But also, Square had their quarter 2 earnings. The market responded very, very positively. The stock is up 7% since market open. And in short, what Square said is that their revenue was up 140% quarter over quarter, and gross profit was up 90%. So that actually means that Square had to cede some profitability somewhere, right? They grew revenue by more than the gross profit grew. And that was very clearly attributed to their Bitcoin selling business. So Their Bitcoin revenue selling business was up 200% year over year at $2.7 billion of revenue, which is absolutely crazy. But that only seeded 55 million of gross profit. So while the profitability really isn't necessarily there for people who want to see these high growth businesses and high profitability businesses, I still think it aligns very well with what Jack Dorsey and Square are trying to do and the philosophy of improving the financial system for the individual and allow for more inclusion. And it's seeing it being rewarded in the stock market, which is more of a traditional finance legacy market, is great. It's good to see.
Nate, I have a question for you. Do you think traditional banks are reading this story and shaking in their boots? How do you think they're responding to this news?
I mean, some of them are very excited about Square, because some of them are have analysts on Square and whatnot. But in terms of traditional banks looking at Square and the payments opportunity that Square is doing, a lot of them are we'll talk about payments innovation as something that they're falling behind in their and what they want to catch up on. A lot of the banks could go ahead and buy Square a banking license. It's purchasing Afterpay, whatnot. It's going to be like a direct competitor to a lot of traditional banks. The narrative was, especially in like early 2000s and 2010s, that banks would just buy fintechs, but here we have a fintech that's pretty much ready to rival the banks. I think it's really interesting, and I think that it's buy now, pay later. Platforms like Afterpay are really interesting for challenging payday lenders and that sort of thing. I was listening to this call yesterday, their conference call. They didn't mention anything about the potential for users using cryptocurrency to kind of pay in those installments, but I imagine that might also be a synergy there for this kind of deal, which is interesting.
Yeah, I'll jump in and just look at the profits from Cash App. So it's really interesting to see Square's Cash App and kind of see how well they're doing in the Bitcoin space. Apparently, the Bitcoin gross profit rose to $55 million. They announced this in a letter to shareholders. I mean, I always think that the market is kind of saturated in terms of all the different avenues you can get on to Bitcoin with, and then new avenues pop up, and then people discover them, and it's just providing more and more bridges for people to enter this world, which is really interesting. We think that if we just have one thing that doesn't have much friction, and everyone will flock there, but we've found that we've had frictionless avenues for years, and people still haven't migrated over to them and explored them. But then when you have existing businesses that work in other areas of finance start to add Bitcoin, that has been a very powerful tool for getting new people on board. You've seen it with Robinhood as well. It's absolutely tremendous how many people are getting involved with cryptocurrency via Robinhood. Cash App is a similar thing. Everyone's using Square, and now they're like, oh, well, there's a Bitcoin option. All right, I'll test it out. So that's really interesting to see. And I just wonder, how many other existing avenues exist out there that haven't yet added cryptocurrency, and whether this is just going to continue to, expose more people to cryptocurrency. Nate, what are your thoughts?
Yeah, I do think that this is something that I think that Square and Jack Dorsey have always been big proponents. Have always been.
George is looking a little different.
Yes.
Who's that? We just got video bombed.
We just got video bombed.
All right.
Sorry, Nate. You continue.
That's a first for the hash. I don't. If I didn't add that, in terms of analysts here, Square more than doubled what estimates were for both earnings per share and their revenue expectations. So.
For sure. Well, we'll see what will happen there. But that is the show for today. Thanks so much for everyone who has tuned in. Stick around, because at 3 p.m. we have All About Bitcoin with Christine Lee. And then tomorrow morning, 9 o'clock, we have first mover. You'll hear all of the latest things in crypto. Obviously, we are every day at 12 o'clock on the Hash. Tune in again, and thank you so much for joining us. Thank you, Nate, George, Jen, and see you tomorrow. Bye.
Bye.
See you guys.